Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a long trade here on crude oil. Kind of a combination setup, the way that this is looking. And because of the way that it's setting up, we need to kind of play this one a little bit differently, just to, be a little bit more cautious. So right now, instead of going for full target, we're going to put our targets up at 89, 68, and 60. Actually, not 89, it's going to be 88. So looking at the way that this is setting up, crude oil has been rising after a strong reversal around 5, going on 6 o'clock or so. And since then, it's reversed back up and really hasn't looked back. This is the first deep pullback that we've had. Now, we were looking initially for a wave pattern, but it doesn't look like it's going to get down to our trigger zone here. So instead, we actually had a little bit of a fake break high, and that gave us this area of support through here that we're kind of playing in combination with the trigger zone. We're just entering in a little bit earlier with extra confirmation. So that triggers in a long trade at 57.47. Looking for continuation to the upside. Now, the first target's going to come off at 57.60, just ahead of those highs up here. And if we can get that one hit, then we're looking at 13 ticks, so 2 off at 13. Follow-up after that is going to be up at 57.68, just ahead of that previous swing high that we made at 70. And that's going to give us 21, taking one contract off there. And then the final target is going to be up at a conservative area front run at 57.88, and that's going to give us 41 ticks. So all in all, if we can get all of them hit, we're looking at 2 off at 13, which is 26, plus another 21, plus another 41, so it gives us 88 ticks on the trade if we can get them all. And it's looking pretty strong. This little snapback retest that we're getting right here in this area, just everything is looking picture perfect. So although it is a little bit aggressive to be entering in before hitting that trigger zone itself, the fact that we moved up so strongly and we can't even get back to the trigger zone, that shows even more strength that the buyers just aren't willing to let it really fall from here. Now, because it's an early entry, that usually means it's going to get a little bit choppy through here. So our stop is safe at 57.37. It should be good in there, but we may get pressured a little bit here. This is an area where there's going to be a lot of defense coming in on both sides. You've got people thinking this is the high, so they're selling. You've got people thinking like us, this isn't the high yet, and we're going to be going back up. We're buying down here, and it's just going to be a fist fight in here for a little bit. It wouldn't be a surprise to see it come back on us a little bit, maybe even come back to retest this level and then bounce off. So our stop at 37 is one tick underneath that level at 38, and that should be enough to hold us in. The fact that they've already shown that to the tick defense at 38, that should mean that they're not going to make it through there again if it does come back on us. So expect a little bit of heat on it, but overall we're looking at our target up at 57.60, 68, and 88. So we'll see if this has what it takes to get back up to the highs and possibly push up into that extension target at 88. All right, so we're catching a massive reversal off of that. I mean, it turned right around on a dime at 10 o'clock. It was a very fast move, and we actually got most of our targets filled already. I wasn't really expecting that kind of move, but in that case, when we move our stop to break even, 57.48, looking for continuation up. That was a very fast move. That was a big line of defense. They weren't playing around here. You can see the timestamps at the bottom. 10 o'clock hits right here, and it's 10 o'clock all the way until here, and then it's 10:01. So all of this happened in a very fast move. So we're hitting 86. We're 2 ticks away from our target, but because of the way that this is setting up and how fast that win, I don't want this to come back on us. So I'm going to lock my stop at 57.70 just in case this decides to come back on us. Now we're 1 tick away. So 1 tick away means that our stop goes up to 79. So we're locked into a profit anyway. Man, there we go. We got our target filled. So again, we're getting out a little bit more conservatively, coming out at 57.88 just to get ahead of this area because this whole area is going to be a line of defense. So definitely want to play this a little bit more conservatively, especially with this big of a move up. It may follow up and make another massive move higher. But with everything in the way, that's kind of the big problem. And you just don't want to play with fire like that. So I'm more than happy being a little bit more conservative. Instead of going for 94 to the tick, I'll take 88 and, give them 5 ticks or so, just so I know that I get filled. And you can see if I'm gunning for 94, I haven't been filled yet, right? Even if I was going for 92 with a little bit of a front run, I still haven't been filled yet. So that's kind of what we're looking at when you're talking about conservative entries and exits. We had an aggressive entry, but in this case, we have to be a little bit more conservative on the exit, and that's why we're hitting that level. We got filled. It went up to 89. We got filled at 88, so we got filled by 1 tick, and now it's starting to fade back off again. So if you're looking for higher moves, you might not get it. It might not go back up. But we're out of the trade. 88 ticks on the trade. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.